my trading history. So at 7 years old, I can remember it now. I was sat at the breakfast table with my parents, and my mum, she's chatting a bit about, she had some stocks and what to do with it, and I was like, oh, what's this? And she showed me the newspaper. Back then we had newspapers, and a full page, it was normally about 3/4 of the way through the paper, you got a full page of all the companies that were publicly traded. And she's like, oh, well, I own some shares in this company, and I'm just wondering whether we should sell it or not. I was like, oh, can I have a go? Thinking it's a bit of a game. And she's like, yeah, sure. So I spent a few days reading the silly paper analyst reports that are 100% nonsense, but I didn't know back then. So I was like, oh, this company, they've written positive things, can we buy some shares in this? I remember it now, the name was Rank. It's Rank Group PLC and Low and Bonar PLC. And mum, being a great mum as she is, she's like, sure. So we bought, she bought on her account some shares in Rank and some shares in Low and Bonar. And that was my first trade. I was 7. And then since then, I'm now 45-ish. I've never stopped. I carried on buying shares through my mum's account. I went to university and school and university, and carried on buying shares. So in the UK, it's very much not a trading setup. Back in the day, before the internet, you had to call, and you had paper confirmations, and you couldn't actively trade, and every trade cost $20. So you really had to think carefully before either buying or selling, just because the costs were massively prohibitive. So come around my 20s, they're just about getting brokerages online, but the costs are still huge. So still 20 quid a round trip. So I was still trying to buy stock. I was, having great runs at certain times, and then, other times when the market was going down, you're not doing quite so well. And I was studying the papers and all this stuff. And then eventually, they started I guess they're not CFD firms. Spread betting shops opened up, and they brought out charting packages, and it became a lot more accessible, and costs came down a little bit. So I started being a bit more active, and I tried, you research certain things. So I was looking at technicals, at fundamentals, mixture of the two, just themes. I was buying stock and selling stock on all sorts of different themes. And then I tried, the whole graphing thing of technicals, of lines, of indicators, all that nonsense. And it's good fun. And then I hit a green patch. So one firm was offering binary options, and this is when I first started working in London. And basically, I worked out my own option pricing model, and then they obviously were pricing the option. And I thought they were a little heavy. And on these binary options that expired, they weren't quick enough to get rid of the vol after the news items at 3. So the US normally come out with their economic news 1:30 or 3 o'clock. So I would with these binary options, as soon as the news item was out, I would whack these binary options, putting on the trades, and then you leave them to expire. And they were starting to work. So then I very quickly set up a Kelly criterion sizing model, so that after each day I upped my bet size, taking in all the history of my likelihood of winning and the size I wanted to allocate. And anyway, over the next few weeks, months, and even years, I was going big on these binary options. So each day, around either 1:30 or 3, I would whack on these trades, and each day I was getting bigger and bigger and bigger. And I was like, oh, this is interesting, this is fun. And I was growing quite a portfolio. I was growing quite a balance. And a few, I don't know, might have been 3 years in, I was really getting to some size, because I was really being disciplined on my bet size. That the broker, so they had already started to slow up my orders. I was putting in fairly big trades, and they were making, I was getting the spinny wheel, rejected. So I'd whack it in again, spinny wheel, rejected. So I knew things were, I was pushing the limit that they were willing to accept, I think. And then anyway, they obviously weren't liking, I don't know if it was me specifically, but they eventually widened the spread. and that was it. That was the end. And I'll never, no matter how good you think your strategy is, no matter how good it is, there's always a chance that it will end tomorrow, is how I now live. Because this strategy, in theory, they were mispriced. They obviously didn't think they were. And in the end, they widened the spread. So that was the end. And literally the day they did it, because I'd been going a long time on this, I was like, oh, that's it. Because I knew my edge. I knew it. I knew exactly how much I could expect to make, and the kind of what profit profile I would achieve. So anyway, that was the end of that. I then carried on trading back the old way, technicals, fundamentals, swanging it about, trying to find some kind of edge in the market. It's not unusual. You might think you just like find one way, but all the traders I've met, they have continually evolved and adapted their style. For example, if you're trading themes, you have to continually change the stocks you're following. For example, back in the day, railways and steel stocks were the height of the very front of everything. Now we're looking at quantum computing, AI, and that kind of stuff. A few years ago it was internet stocks. A few years before that it was social media stocks. Well, I've kind of done that backwards, but you get the point. So, and then now options are becoming more popular. So not only stock trading, but then at one time it was all forex trading, and then at one time it's all commodities and oil. And I remember a few years where oil was all that mattered. The only thing that mattered was the price of oil. Now it's all inflation, and then there are other times when it's only the jobs numbers that matter. So the whole focus behind trading moves all the time. And then if you're trading a certain way, so I know some technical traders that have moving averages, breakout models, bear flags, pennants, all the rest of it, and they'll go through periods where it in theory works, and then they literally, at some point, it literally stops. That bear flag model that they've been running suddenly stops working. So you do have to, as a trader, adapt, and I don't think people realize that. So I think, like any trader, well, I don't know if this is true of everyone, I live not in fear, but I'm constantly waiting for my strategy to stop working. And it's quite a weird world, quite a weird place to live. So each day when I finish, I think, did I make money? Yes or no? Did anything suggest that my strategy won't work tomorrow? Yes or no? And I think there's a famous story about the turtle traders. Interesting book, an interesting thing. These two guys made a bet that they could train traders. So they showed them exactly how they wanted them to trade. I think there were like a dozen of them. And then they said, do it. And they all came out with different results. And whereas they should have, in theory, all traded exactly the same time, although there were two slightly different strategies. But anyway, the results were really varied. And apparently once they published that trading strategy after the experiment finished, that strategy, which had worked for decades, not just like a couple of years, apparently it stopped working. Now that blows my mind. Just so by publishing the strategy that you've just had these guys all use, thinking that strategy is universal, this is what I've heard, I haven't tested it, that strategy stopped working. I find that fascinating and petrifying, because what if someone finds out how I trade and then publishes it? And I think as soon as a certain number of market participants trade in that certain style, that is the end of that strategy working. And I'll tell you why. So people will bang on about support resistance lines. If you all know in advance a support area where, it's the wrong word, buyers. A support line or support area is where you think there'll be buyers. Buyers will step in and go, this is good value here, we're going to buy this market. Well, once everyone knows they're all there, they buy in before. Or if they know they're all there, they go and fill all their orders, and go lower to make them puke. You have to. You can't be trading a strategy that is widely known, is my theory. You have to trade unique. And you'll notice in my other video where I talk about the hedge fund traders, every single one traded a different way, different style. Never did they hold the same positions at any one time. So it's worth bearing that in mind, that don't look to trade the same way as someone else. You need to develop your own style, and you need to never tell a soul, because I think that is the part of an edge that is the crucial part, that you need to be completely independent.